Hey, what's up? John Sonmez here from SimpleProgrammer.com. So I got a real estate question today that I thought I'd answer. If you are interested in my real estate and investment videos, you can check out the whole list here. Just go to that playlist. If you're watching on a mobile, you can find the link below. This question is about how much money do I need to invest in real estate? This has been a pretty popular question. I've gotten this quite a bit. I figured I'd finally answer it. So this question is from, I think it's Rise or Raise. And he says, hey John, I'm interested in possibly investing in real estate. I haven't dived into any real estate topics yet, so apologize if this is a broad question, but I'm wondering how much money should I at least save to invest? So I'm going to give my opinion on this, which is very dependent on a lot of different factors. But in all honesty, what you need to invest in real estate to get started is going to be basically about 20% down payment on whatever property that you're going to buy, enough money to put 20% down, and then a little bit of buffer in case something goes wrong. Because you never want to put yourself in a position where, I think I did a video on this, I called it like a squeeze position, right? Where you basically get into this crunch or squeeze, where what happens is that you're almost like being spread too thin, where something bad happens and it wipes out a whole bunch of good, where you get this chain reaction of bad events. So you need to have a little bit of a buffer. So where you invest is going to, of course, determine how much that you're going to need to put down. Now, a lot of people say, well, you could buy real estate with no money down. Yeah, you could do that. True. Good luck. That's hard to do, but yeah, it's possible. And especially if you're buying a rental property where you're going to live in, yeah, there's some programs. You can get 5% down. You can do some different government programs, and there's things like that. But there's a reason why I would advise investing with 20% down, okay? And this comes from experience, from doing some things the wrong way, from sometimes being a little bit too heavily leveraged and feeling the burn of that, the heat of that, okay? And having crocodile at some point where I'm paying money out of my pocket, which slowed me down, right? These are lessons I learned doing real estate investment. But the reason why I say that primarily is because of a couple of things. One, by putting 20% down, at least here in the US, at the current time, in the current mortgage industry, it's usually 20 or 25%, but usually 20% down is going to give you the lowest possible interest rate as far as for down payment, okay? The second thing it's going to do is it's going to eliminate the need for PMI, which is primary mortgage insurance, okay, property mortgage insurance, whatever it is that insures your mortgage, which is an extra payment. Otherwise, you'll have to get a second loan to have the 20%, and the second loan is always a higher interest rate. So you want to optimize the interest rate that you're getting and the money that you're not pissing away. If you have to get PMI on a property, okay, that's just extra money that you're paying. It's costing you more, so it's making the property less profitable, basically, and so it's going to put you in a much more leveraged position where you're not making as much cash flow, okay? So that's the number one reason. The number two thing is that you really want to be in a position where you're getting enough cash flow out of the property. And it depends on the location, depends on the interest rates, it depends on what the economy is doing at the time. But I have found that in general, if you can find a good deal, and you can put 20% down on it, you're going to reduce your mortgage enough that you're going to be able to cash flow easier, right? It's harder to do that with 10% or 5% down, especially if you've got PMI or a second and you're not getting the best interest rate. So 20% is usually going to be the sweet spot there that's going to make sure that you're not too leveraged. Now, there's certain conditions where you might want to be super leveraged. I have had positions where I could take advantage of huge amounts of leverage, and that was good, but it is a dangerous place to be. And I talked about this. I have a course on real estate investing for software developers. You can check it out here. But I talk about this knob that you can turn between leverage and cash flow, okay? And depending on where you turn that knob, right, if you turn it over to the leverage side, you're going to be in a more of a high risk. You're going to have very low cash flow, maybe negative cash flow, but your potential returns on when appreciation hits, if it does, are going to be much higher because you're making making money off of a smaller portion, right? If you put 1% down or 0% down on a property, then all of that appreciation, all that money that you're making a huge return on your investment because your investment is very, very small, okay? But if you turn it the other way and you put it, for example, if we went all the way to cash flow, where I have a lot of my properties now because I'm more interested in cash flow because I want to be financially independent. I don't really care about, I'm sort of in the retirement phase with my properties. I'm not caring about 30 years from now in the properties at this point. You might have the property paid off 100% cash, right? That's 100% down, and you're going to get all of that rent, right? You're going to still have some expenses and stuff. But what I would caution you, though, is that, and I would say this, okay, so I'll say this before I give you the caution, which is you want to get started as soon as possible. One thing about real estate is that you don't want to sit, okay? If you can, even if you can, under non-ideal situation, right? If you can't save up 20%, if you can get into the 10% and you can find a good property that cash flows, that's probably going to be worth it rather than waiting 2 years to get 20% down, right? And the reason why why I'd say that is because it takes a long time to make money in real estate if you do it the right way. I'm going to advise you also that you get a 30-year fixed loan when you do a loan, because that's also going to be kind of the sweet spot, and it's going to protect you against ups and downs in the market, right? Because as long as your rent stays stable or goes up, which for majority of cases that's the case, it doesn't matter if the property values go up or down. If there's a real estate bubble, you're still going to have enough money to pay the mortgage, right? You need to have some money, cash flow in your pocket, and have a little bit of a buffer there. So the thing I would caution you about also is like I said, is not having enough of a buffer. You need to make sure that you've got a buffer, that you do the due diligence, that you go through and you calculate what is it going to cost, what is the mortgage going to cost, what is the taxes going to cost, the insurance, what is the property management going to cost, you want to have that, what is repair and maintenance, capital expenses that you're going to have, all of those line items, you want to make sure that you do that and then still have a buffer on top of that in order to make sure that you're not going to put yourself in a bad situation. That if you do the due diligence, if you're willing to do that and you're willing to do the legwork to find the good deals, right, which is going to take you some time, then you're going to have a successful real estate investment. It's going to work out. But if you're not willing to do all that work and do that effort, then it's not going to work out. So just realize that, and also realize that I think I would say that as far as the investment goes, the spending the time to actually make the deal is actually more expensive than putting down the down payment, if you think about it, right? At least for most deals, right? For me, it's the time that I've had to put into its deals that's really taken a lot of the time. So I would not worry too much about putting a bigger down payment. If I can get a better secured deal with a bigger down payment, I'm going to try and do that because I want to make the property as profitable as possible. And if you can get a good cash flowing property, if maybe you've got that knob somewhere in the middle, what's going to happen is it's going to allow you to do your next deal quicker. That's why you got to be real careful here, because if you buy a dog, if you buy a crocodile, as they call it in the real estate industry, and it is costing you money out of your pocket every month, if it's costing you $500 a month that you're paying into this thing, or $1,000 a month, and you can't get it rented out and you have all these troubles, then it's going to stop you cold from doing the next deal, right? You want to have some money in your pocket, right? If you do a deal and you're just starting out and it's netting you on average $300, $500 a month that's in your pocket, now it's easier to do your next deal and you can start accelerating that process. It's like a snowball. So you want to capitalize that effect. Again, that's why I would say be a little bit more conservative, have the higher down payment, right? But if you have to make the choice, go ahead and make a move. Do something. You want to invest. So many people that I talk to, they waste so much time and they never actually get invested, never actually do anything, and that's just dumb, right? You'll always be happy with the real estate investment in 20 years down the road. Now, in 10 or 5, you can make choices that would be bad, right? I recommend that you buy a property where on day one, you've made some kind of a profit because you've gotten it under market value, which requires some homework and some legwork. But in hindsight, right, if you have to, rather than hesitate and not do something, in 20 years, know that as long as you're investing for that time period, that most deals, unless you get just a horrible deal, you're going to be glad you did it in 20 years, because of the characteristic of this type of investment. Real estate tends to go up, especially in long chunks of time, and there's a lot of advantages to that, especially tax advantages as well. Again, if you want to know more about that stuff, you can check it out in my course on real estate investment, specifically software developers. I go over all this stuff and none of the bullshit and just give you the basics to get started. That's probably the easiest way to get started. It's a really good investment, I think, if you want to get started in software development. That's why I put it together. And yeah, go ahead and check it out. All right, if you like this video, if you want to get more videos like this one, I'll tell you what you can do. You can click that subscribe button below if you haven't already. I'll talk to you next time. Take care.